me extend. Okay, so if I put this one, there, and this one.
Hello, and welcome to the first Yield App AMA of 2023. We're excited to have you all with us, and we have some exciting plans to share with you over the next hour or so. With me today, I have our CEO, Tim Frost, our CIO, Lucas Keeley, as well as Reese from our DeFi team. Welcome, everyone.
Hey, thanks, Cash, and welcome.
So over the last few weeks, the crypto markets have enjoyed a surprisingly strong rally to kick off 2023. Bitcoin and Ethereum are up 28 and 32% respectively. And, the total market cap is back above $1 trillion for the first time since early November, which is since the FTX collapse, essentially. And even Solana is up more than 100%. What are your thoughts on what are all your thoughts on the pump, guys? Is it sustainable? What's really driving this?
Yeah, it's been pretty interesting few days in the markets, hasn't it? I think it's been a long time since we've seen a lot of green daily candles. I was checking out the liquidations on Glassnode over the last few days, and the numbers just tagged about 500 million, which is the largest since we've had since August 21. So it looks like unanimously, like the market wasn't expecting the move, but I think everyone's probably relieved to see some higher prices in these majors.
I think it's also worth pointing out that the biggest rally came after the US market closed on a holiday weekend, and obviously with a lack of liquidity in the market over that time frame, it's much easier to move the prices higher or lower. And it was actually a good time to actually sort of see that sustained sort of growth yesterday, and it sort of held on to the move. So I think that's obviously a good sign. I think there was a lot of other positive news, right? So the biggest news, I think, was the move in Coinbase as a stock on the US stock exchange. I think seeing that hit 31 last week on Cohen coming out and downgrading the stock, and then seeing it rally up 50+% over the week was quite a big move. So people are starting to realize that those that survive this environment are going to be the ones that have the real sustained value, and I think that was a pretty positive move from traditional markets as well. I think it does obviously help with inflation prints coming in lower. The absolute numbers are still pretty high, but obviously they're coming down, and that's obviously a good sign. And people are sort of repricing Fed hikes, etc. Saw BOJ today come out with some, with a kind of not much of a announcement, but I mean ultimately we're in a pretty sort of clear sky for the next few weeks. I think that we could see a push higher.
Yeah, definitely a number of different factors contributing to the current rally. Ultimately, the prices are pretty much reverting to a mean after the disastrous 2022 that we all had. Moving on to Yield App matters. So we released some significant news yesterday relating to our roadmap and our plans for the future. We'll now pass the stage on to Tim Frost.
Yeah, absolutely. We had exciting announcements, something we've been working on for a number of months, and it's kind of early in that journey to launching our own layer 1 blockchain. For those that know, we have one of the most talented Web3 teams in the space. We've really went from the ground up and designed a network that we feel solves a lot of the problems that are plaguing decentralized finance and just kind of crypto overall, and especially where the landscape is going to go into the future. So we see a tremendous opportunity. We've been working on something for months with Haven 1, which we had that first introduction to yesterday. Obviously, a lot of questions came out, a lot of great questions, and obviously, and what does this mean for Yield App YLD holders? And so we'll try to address most of your questions today. Realizing that we are a year away from launch, so Some things are still to be worked out. I mean, one of the biggest questions is the full tokenomics. I mean, I think it'd be irresponsible at this point to try to roll out full tokenomics at this point, as there's so many questions that we still have to kind of work through. So we got a fully dedicated team working on the project, and it's got great progress and great traction so far with on all fronts that we're kind of working towards. So we'll probably go and let the team kind of go on a full pitch here in a few minutes. Maybe I'll just quickly kind of recap the last few months. 2022 has been a wild ride for everyone kind of involved in the space. I think my most I guess the eventful year in crypto and in finance overall, and I think a lot of people for the same. I think we've done an excellent job navigating it, led by my Lucas, our DeFi team, Justin, and so many others that have helped us navigate very, very turbulent waters. But it's kind of really set us up for bright times ahead. We did close a $40 million in equity funding, something we haven't really publicly really released. Those in our community are probably quite aware of that. But it's just really put us in a good stead, and really allowed us to continue building. Why most of the industry, most of our competition have been able to lay off significant portions of their staff. It's been allowed us actually to go out there and hire key personnel. Those who know that we've been a very bootstrapped company. We had a modest token raise initially. Used that to really bootstrap and build a community, gain market traction, and build a very solid team. Over the last year, I think we've just continue to build out that team and on all fronts in all departments. So we could go in probably later, for those that are interested in the key hires. Of course, for the community, you guys probably see the people you interact with, but our finance department, we've gotten key hires in that, the fund management, and obviously to continue to build out the development team and allow us to build a team to build Haven, where we're collaborating on this, where we're kind of here today. And I guess I'll probably just touch on a few key areas, and then we'll probably pass it over to what we really want to portray today to you guys was Yield App 3.0. 2 years ago, we launched Yield App, and many of you that are listening today, we appreciate you being on this journey with us, and it's been a tremendous ride. 1 year ago, we had Yield App 2.0, the V2 launch. And we think we've had a tremendous year, and we've had many accomplishments and continue to build out through all market cycles. Just to touch on really Haven 1 before we go into the design of everything. We take YLD holders, which all of us the team we're all YLD holders. We all believe very strongly in the asset and the company that we're building. And so everything we do is in the best interest of YLD holders. We know there's a lot of things that we still got to clarify, and we'll try to do our best to clarify everything today. But we feel very strongly of this is a community-driven project. And so when we've looked at other layer ones out there and what they are, they're VC dominated. So by the time most of us are essentially retail or kind of mass market individuals, and to get access or even to know about these exciting layer one of these exciting innovative blockchain projects, oftentimes it's after years after the VCs have essentially been able to take their stake into this. And so we've said, listen, we have what we feel is the best community in crypto. They've been very loyal with us. They've been here today, and we estimate over 40,000 wallets in total have a YLD. That's throughout the platform and throughout the entire ecosystem. And we think it's the best way to be able to bootstrap a layer one is to reward our network and get them involved at the ground floor. And so questions that come up, like there's dilution. What does that mean? Well, I think we might as well just kind of directly answer a couple of these things right now. You have to understand we're building an entire ecosystem from the ground up, and our objective is to compete with other existing and thriving ecosystems, and you can't do this without capital. So our goal is over the next months to go out there and raise capital for Haven. We are still working on that, and obviously our market positioning. But the one thing that we want our community to be rest assured of is we, we're doing our best to have your best interests at heart by essentially making sure you're moving across in one-to-one. So raising additional capital, we have to attract the top projects and the top developers in the crypto ecosystem to build on Haven. And you can't do this without incentivization program. We're thinking, right now we're thinking a decade out, right? So how do we keep incentivizing and to attract a world-class team to build Haven out, to build Yield App out? So, while we're not going to be able to release full tokenomics today, I think that we've done an excellent job so far, and want to be very transparent. Haven 1 is approximately 1 year out from now. The question is why announce it so early, and it's because you guys have been with us, and we want to be very transparent that the projects we are working on. So I'm sure more questions will come in again, but today we wanted to focus on Yield App 3.0. I know this thing has been in work for quite a while. Various parts of Yield App of the 3.0 vision have already started to roll out. And I think on that, maybe Lucas, I'll pass it over to you, and then you can kind of give everyone a bit of a glimpse of what we're building behind the scene, why we're so excited.
Sure. Thanks, Tim. I think one of the important things to remember is we really wanted to build something that actually has real world use cases. So I'm hoping that you guys can see the screen. Is that okay? So Yield App originally started out as an earn platform, and obviously we've taken client money and we've used that to generate yields on platform. That industry is coming under increasing scrutiny and a lot of regulatory pressure. And we think that we've done a pretty good job in the way we've navigated these developments. But also over the summer, when we opened up the portfolio and said, look, this is what we've done with the capital. This is why we aren't in Terra Luna. This is why we aren't in Three Arrows and all the other problems that were coming home to roost. We got a lot of feedback about how we could evolve the platform beyond just earn, and a lot of time and effort went into building what we're launching in Yield App 3.0, which is our community. Well, it's a digital wealth management platform, and I'll go into the detail on that. So there is a disclaimer. This isn't investment advice, and a part of this deck came from our Series A cap raise. So there's some stuff that's taken out because we're not trying to raise money here. We're just trying to give you an idea of what it is that we went out to sustain the business and grow where we want to get to. So we want to build and I think we have built a trusted wealth management platform where both retail and sophisticated investors can gain access to the highest quality yield products in this space. The big scrutiny is actually retail. Sophisticated investors, there's a lot of things we can do with them, but on the retail side, regulator after regulator after regulator is saying, hey, you need better disclosure, you need this, you need that, etc. And we saw that with the SEC and Gemini Earn and coming out and speaking to Coinbase and all these platforms, right? We know this is increasingly being scrutinized. And it's retail that's the real focus in that space. So we're trying to evolve with the industry. So our key customers, believe it or not, and 70% of our AUM is actually high net worth individuals, family offices and institutions. Whilst we have a large number of clients, the majority of capital is high net worth or institutional. And that's mainly in Europe and Asia. We don't have any US clients. And we have a set of dedicated relationship managers and treasury management professionals. We have over 50 staff with extensive expertise across traditional finance, technology, marketing, and business development. For those of you that don't know me, I ran e-commerce for UBS from turn of the millennium in 2000, building out pan-European private banking for affluent clients. I then went on to build a fintech, which was pre-iPhones, which was Palm Pilots, which was HPI pack WAP devices and iMode devices, offering what you look at as interactive brokers, a full portfolio management system, which we sold in 2003. And I spent the rest of my career trading structured and complex products for UBS and Credit Suisse all over the world, heading up cross-market trading, which was any asset class anywhere in the world out to a 20-year tenor. So my experience in building wealth management products, especially in this space, is pretty comprehensive. And when we went out and said, right, where do we evolve this to? Tim and I, Reese, Justin, and the core team, we sat down and we built out a framework of what we think this industry needs. Now, why does the industry need digital wealth management? Well, the main reason, and I was talking with the head of derivatives from Genesis last night on this, is that Basel III capital requirements prevent traditional banks being in this space. Right? It just costs too much money to offer the products. So we're building it. And to build a fully fledged private bank for digital currency or digital assets for crypto wealth takes time, takes money, and it takes a huge amount of resources in not just regulatory, but risk, governance, portfolio management, etc. So it takes time, it takes money, and it does take a huge amount of work. But we have built a very trusted brand in this community. Since 2021, 2 years ago, we've got 90,000 plus customers and 1,000 plus high net worths. And it's a very, very interesting mix of people. We have a very vocal community that obviously give us a huge amount of feedback, but we have a lot of high net worth clients who want to be serviced as if they were at UBS and have accounts with UBS or Credit Suisse or Pictet or whatever, and they can't get banked by those or serviced by those firms in the digital asset space. And so we're forced to sort of look at the overall business and say, well, how do we bring the community on this journey with us? At the same time, when we build all these things, how do we make them institutionally relevant so that we can actually work with, the biggest financial institutions in the world and offering digital wealth product? So we went out and we did a $40 million round, and we continue to use that money to build out the portfolio and risk teams and compliance teams. And you've got no idea how much compliance is becoming extremely important, but it costs, to hire seasoned compliance and legal professionals is not easy. And we're looking to grow our managed assets to about $5 billion and our high net worth user base to about 5,000 by 2025. So, as I said, the biggest problem is actually the Basel III capital requirements. But the other problem is there's a lack of trust and transparency in the industry. There's a lack of personal support and education. And as you've seen, earning in crypto is not just risky, but it's also quite complex. And I think we've tried to be as transparent and visible as possible. We've focused on capital preservation. We've got licenses and regulatory licenses where we need them. And some of the things there's just no license for, right? Some of the stuff we want to do, we just can't get a license for anyway. It doesn't exist, right? And then we've focused on the private banking style relationship management through, those who've got a private client advisor. I think they're pretty happy with that. So what's the market opportunity, right? So we see this is what we call a fight for wealth pie, right? Let's say that there's $500 billion of user assets out there. And we want to get, let's say, 1% of that, right? How do we get 1% of wealth pie? And this is how we think about it in private banking. Like, what's the absolute wealth out there, and how do we grow our pie or grow as much of the piece of that pie as possible? And that's our goal, right? How do we become the crypto wealth manager of choice? And that may mean that we build all this stuff and we get acquired by a traditional private bank, or it means that we survive, or it means we don't. But the goal is to be a relevant player in the private banking space for digital assets or private wealth management space. We're not a bank, so let me just rephrase that. Being a wealth manager, a wealth advisor, and working with people who will ultimately end up having a large majority of their asset base in digital assets with the advent of central bank digital currencies and other digital assets coming on chain over the coming years. For a lot of people don't realize that HSBC was, in 2020 had about $18 billion of digital assets in custody on their platform, none of which were mainstream crypto assets, right? It was all just things like stuff that they tokenize in rents, in yield, in other cash flows. Ultimately, crypto is about, in digital assets, is about tokenizing cash flows. And if we're going to start to tokenize cash flows, then we need to be able to manage those from a wealth management perspective. So the crypto high net worths are our core demographic. They really are, and we work very, very closely with those 1,000 plus that we have on the platform, and they have essentially driven the growth and product suite that we offer, and trickling that down into the broader platform for stuff that's relevant and stuff that we think is worth producing for them, for our overall client base. But there is a big difference between a sophisticated investor and a retail investor and what we can offer those clients. And for those of you who've played on our structured products platform and had time to actually use that, I mean, we've had some amazing feedback on that. But a lot of the clients that we have, whilst not the most of our wealth, or most of our AUM, are stuck with the Earn Plus product. And that's why we've been trying to, evolve that platform for them as well. What do we have? We have dedicated one-to-one support. We've got multilingual account managers. We've got priority access to these future products, and this is the big driver between the growth on our platform and the trust that we've engendered throughout what's been a pretty trying 2022. Our goal, as I said, is to get to 5,000 plus high net worths. You can see that we had a very strong growth from February 21 through to sort of peaking around March 22. And then we started to see that big sell-off in digital assets across the board. Some tokens going to zero literally, and then others we're seeing 70 to 90% losses. And so on a coin perspective, we just brace this on coins. Over that sort of redemption period of post Celsius, etc., we lost about 30% of our coins, but obviously AUM depreciated maybe about 70% or so, 60%, give or take. And so we obviously took that on board and said, okay, how do we bring those clients back to us? Like, a lot of people have got capital stuck in different platforms such as Celsius, BlockFi, etc. But there are other clients out there who no longer trust centralized platforms, right? It's cold storage or bust, right? And I think that's something that we've been trying to deal with and work with and understand that the industry has lost a huge amount of trust, and people aren't willing to supply credit or offer loans in this industry like they were a year or so ago. And how did we grow our community? So we obviously had the YLD membership program. Obviously that's the thing that's come into contention with the launch of Haven 1. Obviously we've grown our educational content. We've had AMAs and events, and we've got the referral program, affiliate program. Obviously we've done a lot of things. But ultimately, I think what we've done very well is capital preservation and working with our clients in managing their wealth. So now we're sort of evolving towards this complete digital wealth platform to become what would be the first complete, digital wealth platform out there. And we have a comprehensive range of sort of yield products focused on Web3 ecosystem, and a lot of this has been designed for our sophisticated investors, which suits kind of varying risk appetites and return expectations. What is it? It's basically the platform that allows our clients to invest in our different fund products, be it DeFi fund, market neutral fund, emerging managers fund. So what's an emerging managers fund? It's where you start to get economics in startup hedge funds. We offer obviously extensive due diligence on managers. We build that diversification in. And we're helping our clients navigate what's becoming an increasingly fragmented market and fewer players. And I think we've done a reasonably good job of that. Obviously, we provide pretty much, comprehensive education and structured products and are beyond that in our offering. How did we do on the fund side? Well, we did, I think, really well. We diligenced a lot of funds. We passed about 7% of managers we work with, and some of the things that come up when you do DD on a manager, generally around the people, is pretty bad. So I think we've done pretty well there. We launched a DeFi fund last year. We've got a systematic market neutral fund that we're looking to launch. We're looking at building early stage VC. We're working on a mining and infrastructure fund, and these are all things that we've been working on. We've got a smart beta CTA fund strategies that has done very well over the last few months. Pretty happy with that. And then we want to build sort of the buy right funds and this emerging managers sort of fund of funds that we can sort of seed different strategies and different hedge funds in. Of the managers we chose, 3 of them were nominated for major awards last year in the middle of the summer, and 2 of them are up for awards again in the US now. So the absolute return, not in the just benchmark return. So they've done pretty well. So we've chosen well, and I think we did well there. What else did we do is we've built in-house through acquisition as well a fully comprehensive structured products platform. We can offer capital preservation products, fully optimization products, participation in levered products, and you can see here that we have a lot of different products that are available to our sophisticated clients, and some of these will trickle into the retail platform where the risk is appropriate. We're talking yields here that if you really want to start taking some risk with some of your stables or some of your BTC and ETH, you can get sort of high double-digit yields, 50, 60, 70%, selling optionality into the market and taking market views. Obviously, we don't do that with your money, but if you wanted to do that with your own money, you can start to get pretty incredible yields. I was looking at a 1-month dual currency deposit yesterday on Ethereum, was paying 66% on a 1500 strike product, and we'll have education and things like this on that. And so what we're really trying to show you is that what's gone on behind the scenes is trying to build out the fully fledged wealth offering for clients, and a piece of that will be coming into the retail platform. Then we have a Yield App Labs, and Reese, I'll hand over to you for this. And this is where Haven 1 came in. And the reason why we had to build Haven 1 is something that we came across in our DeFi fund that created a huge amount of problems for where we wanted to take this business. We got approached by a lot of institutions, especially traditional finance institutions, to do treasury management because our DeFi performance had been really solid. And for those on the Telegram channel, I think I posted the annual performance of that platform, and it's really impressive. The problem is that a lot of the protocols that we'd use or the pools we'd invest into in DeFi are prohibited for regulated traditional financial firms. They cannot be commingled with Okta-sanctioned addresses, right? It just doesn't work, right? And the reason it's a real problem is obviously the AML KYC, but regulators will fine you, and fining you is just not an option. The risk reward just isn't there. So Haven 1 was kind of our idea of saying, well, how do we bring these people into an ecosystem where they aren't in an environment where they can be commingled with sanctioned wallets? And on top of that, we've built a fully fledged PMS system, a portfolio management system, and we've done a lot of things behind the scene in Yield App Labs, which is pure DeFi driven. And Reese, I'll hand over to you for that.
Cheers, thanks, Lucas. Yeah, just to wrap that back up. Throughout our Yield App's history, as many of you know, we've been very active in the DeFi space, particularly as it relates to market neutral liquidity provision. And through that expertise in the field, I believe our team is second to none. Compared to the institutions we talk to, they're already very impressed about the tooling we've built and how we execute, as Lucas mentioned. Many of those tools that we use are built in-house, and we can accredit avoiding there's been $5 billion worth of losses in DeFi to date, and these tools have helped us navigate those completely cleanly. And I know you guys see the end result of that, of not having any issues on the platform and being able to fulfill withdrawals when you request them. There's a lot that goes into building those tools. I guess not to mention these tools are built to identify things that systemic risk, like identifying economically fragile models, similar to UST and Luna. We identified that months ahead, and that's how those in-house toolkits we develop help to forecast those events. So there's a number of tools that we continue to develop, and always under regression testing and improving. And I'll touch a few of those tools here and provide some insight as to what we're developing at Yield App Labs. So the PMS that Lucas mentioned, Moving large sums of capital through DeFi, you uncover a lot of problems. The APYs you see on a front end, on Curve or Aave, for example, it's not always what you expect it to be when you see what's on the box. Like, there's a lot of calculations that go on the back end, and when you're looking at an API on an interface at a point in time, that's at that particular block. And you may not check that block, not check that UI for another 24 hours, and that number fluctuates a lot. And that's not a big deal when it's a few $1,000s, but when you're moving millions of dollars through these protocols, it makes a significant impact to the end result and what we end up with that NAV. So we had to build some tooling around this, and the PMS system addresses that problem. We know it's a large problem for institutional investors. It's something we could white label out. It's something that we haven't, and we don't really have plans to do it either. Like, it's a great in-house tool, but that's the kind of stuff that we're innovating on to edge out this alpha, and that's how we get those safe yield returns in DeFi that Lucas mentioned the institutions are always trying to get involved with. Lucas did mention as well, like, our infrastructure applications around in-house staking validators and setups similar to the staking providers you may be familiar with, all through the ecosystem. It's not a huge innovative part of what we do, but it's something that is a solid yield that we pass through in a risk-free way. It's network-related staking. And Web3 dApp space. So this is where we first made our foray into moving from a passive liquidity provider in DeFi to being more proactive and deploying contracts and applications. So we very much, just to be clear, we very much support the vision for Ethereum, and we've transacted through DeFi, as I mentioned, with hundreds of millions of dollars, and that's enabled us to identify some product suites that we're closing markets gap with. There's more to come on this. We do have a number of developments in like the EVM space on Ethereum, Arbitrum, and Optimism that we'll be looking to expand on in the future that are literally on those chains and supporting products. So they will not take priority over Haven. Haven is the number one priority, but we do have all these things in the works behind the scenes on the DeFi side and the Web3 side with some world-class solidity developers that have got 5, 6 year tenure in this space. They're very difficult to find, and I'm very proud of the work that we've done so far. And I guess the final point there, and our biggest one, is of course everyone learned of Haven 1 yesterday, and we'll dive into some of those questions the community had a little bit later on. I know you guys are raring the bit to get some of those questions answered. So just to recap on what Lucas said, the purpose of Haven 1, it's not to compete with Ethereum. Very much the contrary, actually. It's the purpose is to provide an ecosystem to users that are much more risk adverse or not as tech savvy, that are aware of how to navigate the pitfalls that come with your own custody. And we see challenges with this. I think most people on this call today probably know someone that's lost a seed phrase or something's gone wrong and they've lost assets or transacted with the contract, or unfortunately bought a token that ended up being some kind of scam. And that's really what we're building this for. And the nature of decentralized networks doesn't allow you to abstract those things because by definition, that's what it provides. And again, we are fully in support of that ethos, but we also identify that there is a huge market opportunity to bridge Web 2 users to Web 3, and we cannot do it with a friction-filled onboarding experience that comes with a decentralized network to that degree, similar to Ethereum. So alongside that, Lucas also mentioned like the commingling of assets along sanctioned addresses. It's just something that prohibits institutions from interacting with Web3. And we know institutional capital is coming, and we know there's a timeline on it, but we identify there's a clear market gap here for an opportunity to provide not only a risk-adverse, non-technical customer the ability to enter Web3 in a guardrail sandbox environment where they can transact without having to assess all the risk that we do for you guys on the yield side, but just general transactions and swapping assets. But also, in conjunction with that, it provides an environment for institutions to transact publicly on chain without that counterparty risk. We've only revealed a little bit in a small slice of what Haven's vision is. And Tim mentioned that we're so far out from that launch, but I guess the proposition behind like getting everyone across it a year out was so we could take you guys on this journey with us as we develop and we release these applications and update our partnerships. This is all stuff that's already happened behind the scenes, but we don't want to drop it all at once. It's a much better experience if we take everyone along for the ride. So that's I guess that's everything from my side, and hopefully that gives a little bit more clarity on like some high level things, and we'll get into some questions a bit later.
No, thanks, Reese. Just to kind of recap a few things. I mean, we see Haven One is extremely synergistic with everything we're building at Yield App. Building secure financial products, obviously for the entire crypto ecosystem, and obviously it's very synergistic. We forecast that we're going to see tens of thousands and potentially hundreds of thousands of users be able to onboard at Yield App to get access to Haven One, and obviously we foresee many of our users actually embarking on their on-chain or decentralized finance kind of journey, and through Haven One. So, and just solving a lot of the problems that we do see in the ecosystem at large, which it is a kind of a barrier to seeing that true institutional capital enter the space. So, no, thanks guys. I think I'm very very excited for where things over. But I guess back over to you, Cash.
Thanks for the presentation, guys. A lot of information there to dissect, and not just from this latest AMA. We'll be also discussing things on Discord. There's going to be more blogs and information packages that'll be sent out in the next few weeks. So we'll get through everything slowly to make sure everyone understands what's going on. So just rest assured we're on top of getting things out to the community more and more. Now, Reese, I have a question for you. So essentially, there's been there'll be a big change for YLD holders moving from YLD to H1. Could you perhaps elaborate and discuss the benefits, all the future benefits that the H1 token holders will have that the current YLD holders don't have?
Yeah, absolutely. And this is the decision we made to give. I guess we value the community, of course. Lucas and Tim have discussed this all the way through this call today, and the ability to have access to the ground floor of what we're building, we see as a huge opportunity. Now, the current YLD token is a membership token. I know that is something everyone's well aware of. They've been involved with this platform and they're on this call today. But it's one utility, and it is very difficult to add utility to that environment. But the ability for Haven One to bring some utility into this ecosystem is enormous. If we think about what that enables, and I'm not sure how deep a lot of people have gone in on the white paper, and obviously there's more information coming. There's a few different purposes of utility behind this token. It does inherit the membership qualities of the YLD token. It will be used for paying gas on the network, so similar to how Ethereum does on Ethereum mainnet today. So there's a utility there that is used to transact in that environment. So the more users that are using that network, more of the supply is being removed. Whereas not something that happens in YLD is like an example there. And then we have governance of the overall protocol, which will give the say in the direction of the development of the network and the growth. And then one of the core features that is fairly unique, that we've been a little bit protective over the details of, is the native protocols on the chain, similar to what you have with Uniswap. Aave is a lending protocol, and some perpetuals protocols on chain like GMX. The Haven One token will be the governance token for our versions of those things on this chain that are working in that guardrail environment. So the opportunity to gain incentivization for Haven One token holders will be generated from those protocols. So we're essentially, if you look at the comparison between utility for YLD, we're switching out one utility for 5 different utility streams you would expect from 5 different protocols or 5 different businesses in a normal Web3 environment. So there's an exponential value add when it comes to what that token can deliver versus the existing setup. So that's something that we believe that the community would really value, having access to that very early on.
Thanks, Reese. And just again, we're reiterating to our community, the value proposition of a blockchain token will always be significantly greater than anything a YLD membership token can bring. We will definitely be discussing more of this with our community later on and publishing more and more information as time goes on. But rest assured that we will be we're on top of educating everyone on how this will work and the future steps as well. Reese, I also have a question about expanding on what it means that Haven will be a roll-up, and the difference between what a roll-up is and just being a layer 2 or a layer 1, and how this relates to security of a blockchain.
Yeah, sure. It's a good question, and I noticed a couple of these questions in the Telegram as well, particularly how I guess Haven 1 relates to its relationship with Ethereum. And I know I've already reiterated like that Haven is designed to be complementary to Ethereum and bring adoption to Ethereum. In fact, in the live paper, it does mention that the Haven 1 will be donating to the Protocol Guild, which I'm not sure how many people are familiar with. That is it's a public goods service that was designed to continue funding the core development of Ethereum. So we're showing our support that way. As far as like the why we can't use another layer 1 and why we need to do our own, there currently doesn't exist a layer 1 blockchain that possesses the risk controls at a network level that we need to execute this in a guarded environment that can provide the solution that satisfies the security and the regulatory side of things that we need to conduct this the way that it's designed to bridge that gap between Web 2, Web 3. If there was, there wouldn't be a product market fit really. So there's 155 plus blockchains at the moment. This is a value prop that doesn't exist in the current space. So that's the gap it fills. There's nowhere we could really deploy these applications without having those guardrails up. As it pertains to a roll-up, the story of Polygon is probably a good analogous to how it started out as a side chain to deload Ethereum. The transactions got very high. Ethereum was very expensive. It deloaded a lot of the volume across, and then Polygon reiterated its commitment to Ethereum and stated publicly that it would eventually transition to a roll-up. And our story is very similar with Haven 1. And the challenge that we have is a lot more unique, though, in that the roll-up technology that Arbitrum and Optimism use today is still very nascent. Those services are still centralized services currently today. They have centralized sequences, and the technology is not proven out. What is proven out is the EVM, and we know that's battle-tested, time-tested. We can rely on that. It's safe and secure. We can't necessarily conduct ourselves in a guarded environment with safety and security and say that it has been battle tested if we start off as an L2 or a roll up to Ethereum. So over time, as that technology matures and ZK technology also improves over time, and Starkware improves their security and time in market, and that's battle tested, that is what we'll be transitioning to as a roll-up and post-settlement data to Ethereum. But until that time, until those scaling methods are battle tested, they're not even working fully in production today as a decentralized service, bear in mind. So there's still a ways to go to get to that point. But once it is there, we will transition to that as well. It's just we can't move across with nascent, early stage technology and say that we're also valuing security and prioritizing that. So hopefully that gives a little bit of clarity behind Haven 1's relationship to Ethereum and what the future does look like. If we could do this in an environment where we could control the network level controls on Ethereum and post as a roll up and have those, we would just do it and to deploy dApps, but it's not possible. And to do that would sacrifice the ethos of Ethereum at its core, right? So having the value proposition of a side chain that fulfills this white space that allows us to grow with Ethereum is really where we see the value proposition. So hopefully that gives them more color.
Thanks, Reese. And we'll be exploring technology as the year goes on. There's still a long way to go before we launch. So maybe our technology will be more advanced and move faster than we expect. Another question that people had were about validators. Is there any information that we can disclose right now on how validators work and who qualifies for a validator, Reese?
Yeah, sure. So the network itself will have public entities that are well known in the space, that have tenure in this ecosystem and have real world reputational risk if they don't comply with the network controls. So normally, in a proof of stake network, you have a slashing mechanic, like you'll have in Ethereum. If a validator is attempting to be malicious, the stake is slashed. In this environment, with a small number of trusted authorities that enforce these network regulations that contribute to making the network safe and secure from a guardrails perspective, it's their reputational risk that is on the line. The Haven Foundation, if for those of you that have gone through the white paper, will notice that organization in there is designed to build up these agreements with these entities that are validators and ensure that there is adequate skin in the game for those validators. Now, they won't be publicly open because that would defeat the purpose of having trusted parties, for example. So, but as I know, there were some questions around whether the validators will be required to stake tokens in order to validate, and that is still something we're working through. By definition on the network, it's not completely necessary because they have reputational risk that secures the well-being of the network, and there's potentially legal recourse if they act maliciously where there's not in a decentralized network. So that gives hopefully that closes the gap on that, but it is something that's not set in stone yet. So there's a number of different mechanics that we are testing currently and modeling it out economically, and that's why we can't really give a lot of hard answers until that modeling is all done. And hopefully you guys, like from our everything you know about how tight we are with risk and how we build our models to operate securely, particularly in the DeFi space, you can understand where we're coming from to make sure those the models we're building are robust and secure for the future.
Fantastic. Thanks again, Reese. Really detailed explanation on how that's going to work. Tim, we have a question for you about resources. Now that there's been mentioned that the V2 was slow in delivery, and now there's concerns that Haven 1 will take away some of Yield App's resources. Is there any information that you can share with us if Haven 1 will have an independent team, or how things are going to work in general?
Yeah, I think that's a good question. Obviously, it comes up a lot. I mean, we know internally there's so many things happening at Yield App. I mean, over the last year, I mean, this is our 1 year anniversary from launching the V2, and since then, I mean, we've identified a lot of opportunities. So our original roadmap has continued to deviate, obviously, as we're a fluid business and we want to take opportunity as opportunity. Persist into the market. So we've launched Earn Plus. We've launched our second generation of the risk model that we built and manage our capital internally. A lot of these things happen behind the scene. Continued to build out that portfolio management system. Delivered obviously the mobile apps, and we're continuing to push frequent updates on those. We have structured products again that should be available as early as this month. And that's ready to go on this side. The digital wealth platform, again, Lucas maybe can shed some light on that, but that's essentially very close to getting ready to go. We're testing fiat transactions and increasing swap limits. So, we think we've had a very productive year, but overall, I think I do hear the concerns, and obviously as a business we're continuing to evolve. Haven 1 does have its own independent team working on this, led by the team. So it doesn't detract away from the resources of Yield App and everything that we're building on this side. But I think that's a very, very valid point. But I think we're moving along at a very top speed at the moment.
Sounds like a lot of exciting development. Lucas, do you want to talk about when the wealth platform will be delivered?
Sure. So the biggest driver of digital wealth, the biggest demand is in structured products. The thing that I think many people don't understand is, or just aren't aware of, and I say don't understand, that's a bit condescending, but people just aren't aware of, is that a lot of the things that we're building were requested by our community. Now, if we want to sort of sit there and think to yourself, okay, I'm a user, I own X, I own Y, YLD. But our biggest clients, our individual clients, our high net worth clients, specifically requested from us that they don't want to be in Earn Plus when they look through the portfolio, and they wanted to be in the portfolio items themselves. And so we were asked if we could build them the wealth platform that they had elsewhere. And so that's what we built. And part of that is structured products, so they can build different risk profiles for their type of risk appetite. And instead of having a one product sort of offering, they get access to super high risk stuff and super low risk stuff. So if you want to put limit orders in to buy BTC or ETH at much lower levels and earn yield on the optionality that you've just sold, things like that. They want that kind of thing. Then they want access to, the diligence platform and the managers that we use. We have like a hedge fund supermarket. We have access to, different infrastructure funds, different venture capital funds, things like that. People want those products because they want to diversify away from just very, very super low risk guaranteed yield, right? The yields we offer you are nothing like what the yields that we could offer if, for example, let's just say last year, from November, we ran a BTC buy right fund where we just sold BTC upside calls for a year. These guys would have made 50, 60, 70% yields on that and still own the same number of BTC that they would have had. And they're aware of this, and they said, well, you've got all these capabilities. We want access to that. And that's what digital wealth will give them. It will give them, the qualified investors will get access to a full suite of wealth products for different type of risk appetites. Those that want 0 to no risk and want cold storage, great. Those that want super high risk and want to take directional views on markets, they can have that. But ultimately, it's going to be their risk decision and working with their relationship managers. And that was the key driver of digital wealth. And it was 70% of the AUM on the platform. So we lost less than 1% of our high net worth clients when we showed the portfolio overall to them, and they all came back and said, this is what we want to do. And they said, okay, so we'll build it. So we're building it. And then whilst we were building it, we built a DeFi business that is world-class. And when we looked at the performance and the track record of a DeFi business, and it had like 300 million or it was like a huge amount of money was going through that platform, we looked at that and we had a couple of institutions that came to us and they said to us, we want this, but we can't come into Aave, we can't come into, some of the other protocols because we can't afford to be commingled. And so we sat down and said, well, what if we were to build all these different capabilities for you, because we've got it all. We know what we're doing in this space, and we've consulted on some of the biggest projects in the world on this stuff. What if we build it with the guardrails, with the regulatory framework, and make that happen? And they were, okay, yeah, this is really, really interesting. So, Reese, myself, Tim, we sat down with some of the biggest wealth management companies in the world, and we're talking the UBSs, we're talking the Pictets, we're talking BlackRock, we're talking the biggest guys. And we presented the whole platform, and the feedback was unbelievable. They were just astonished that someone had actually gone and built what we built. And the thing is that one of those calls, we literally showed that firm the key pillar of their digital wealth or digital asset management platform. And they looked at us and said, this is everything that we hope to build in our business. And it's the key pillar of where we take this business going forward. And we'd already built half of most of it. And we ran into the DeFi commingling problem. And it kind of came from there that we were like, okay, we now have a known institutional problem. And that known institutional problem is sanctioned addresses. And Jerome, yes, BlackRock, really. And so we went through the whole thing and we said, okay, this is what we need to go and do. And how do we finance all of this? How do we build digital wealth? And how do we build a layer one that allows those players to play and actually be a centralized ecosystem, similar to like Bond Trader is in TradFi for trading bonds? How do we build it so it's all on chain and dealing with all the people that want to see, your proof of reserves, all this other stuff, and say, how do we make sure that we have absolute transparency, and how do we make sure that we build the products our clients actually want? Now, I've seen people who've got $100 on our platform create the worst kind of FUD for our client that's got $25 million on our platform or $40 million on our platform, right? And it creates huge problems for everyone. Like, we had to liquidate over the summer pretty much most of our portfolio just to deal with the liquidation desires of a third of the community, who then decided to say, oh, well, just so I wanted to get my money out, and now I'll just put it back, but thanks very much. And managing that liquidity, managing that risk, and making sure that we could still pay the yields to our clients was extremely frustrating for us in the portfolio team. We were like, well, okay, you want your money, here it is. That's why Earn Plus came, because people said, well, I don't want to get screwed because some people are creating a huge amount of FUD for us and it's costing me yield. And that's why we had to lower yields, because people were just creating huge problems. And there we were in June. We literally made 0 yield for the whole of June because we had to protect the capital on platform and make sure it was liquid for everyone. And that's what we do, right? We preserve wealth. That's what we really focus on doing. And once we've sort of navigated this year, sat down with our client base, and it's not just the 90,000 clients or the number of active users. It's the people that actually drive the AUM and say, I trust you with the large swathes of my wealth that I've generated over the last few years, and I've got nowhere to go with it. Someone that's got $1,000 with us and someone that's got $10 million with us have the same product. But those people with $10 million want more. They want all the things that they can get with their private banks. And so we have to build it. And then once we've built it, how do we work with the big private banks out there to make this stuff available to them so their clients can use it too, because of the Basel III regulations that prevent them from doing that? And that's where Haven One comes in, right? How do we make sure that we've got the ecosystem that allows it to be a broad use case? And that's come from a huge amount of experience dealing with, protocol after protocol, dealing with institutions and building out this platform. And that's what we're building. And people are sitting there and go, I need one, I've got some dilution, I've got this, right? But ultimately, we need to pay for all these things, right? We're not going to just sit there still and say, well, we're just still going to try and earn yield, right? Trying to generate yield right now in DeFi, in certain aspects of the marketplace with the counterparty risk, the lack of credit, the lack of liquidity, the reduction in depth of the market, the wider spreads, is really, really difficult, right? So we're trying to build to sustain what we think is going to be the evolution of this industry. And as I said, as Tim mentioned earlier, we've done a $40 million round equity raise for Series A to build out digital wealth. And it was from that we realized that we need to go and build Haven One if we want to really expand and actually have an exit so that we're actually relevant to the broader financial services community. So that's what it's about.
Thanks, Lucas. That's all very exciting information. I think a lot to look forward to on that front. I'm sure many of our users will be very keen to go and try that out once they get an opportunity to do so. There's still a lot of questions on Telegram and on the YouTube comment section about token dilution and the concerns that come along with it. Tim, you touched on this earlier, but I think it might be worth discussing again to alleviate some of these concerns and potentially discuss the overall benefits that having a bigger piece of the pie will bring. Is this something you can have a bit more of a chat about now?
Yeah, sure. Maybe I'll touch on it a little bit. I mean, I understand. I've seen the commentary. I think we all have, and we get it, right? And obviously, what we're trying to be is transparent upfront, and with such a long time from now. And obviously, we want to inform people of our decision. First off, our decision, we felt that giving the opportunity to our backers to swap from our membership token to our layer one and getting at the ground floor is a tremendous opportunity. And we feel like the opportunity for Yield app for Haven One is much more immense than was before. But realize that not everyone's going to understand these things. Currently, there's about 70% of WildE in circulation. That's going to continue to uptick over the next year. And the reality is, of that 300 million tokens, there's not the adequate supply to go out there and raise an 8-figure sum from strategic investors with good terms. Why making sure those terms at the same time don't conflict or hurt current WildE holders. And there's a balance here. We need to be able to incentivize the team for the next decade. The company itself does need a treasury of the native assets that we're working with, and I hope that everyone can understand the importance and why you as an individual would want to make sure that any companies that have issued tokens needs a significant amount of corporate treasury of that asset. I think it should be quite self-explanatory, but so we do realize that no one likes dilution. I mean, we just raised a Series A round, and all of us founders are diluted in part of it, and nobody really likes it. But it's for the betterment of the company and allows us to really drive something forward. So we do want to hear all your feedback. Unfortunately, there will be dilution. There's no way of doing this project without significant dilution, and it goes across the whole board, and it's about building something much bigger than what we have today. I guess on that, maybe Reese, you maybe want to expand on a few things.
Yeah, sure. Thanks, Tim. So yeah, like you mentioned, it is something that expansion, like I think, like just to clear it up, like if we gave every user a 1-to-1 swap, there would be nothing left. A 1-to-1 swap at no dilution, and there was an expansion supply, there would be nothing left, and we would just be moving the problem. Like we wouldn't have any incentives to then stimulate the community. I think the easiest way to wrap your head around like the difference in the utility is currently we have one token that is suitable for one use only. So let's say, for example, you had an Apple coin that could only be used to buy apples, and then you went to the store every day to sell these Apple coins, and people could buy them off you, but there's not that much demand for the Apple coin, so there's not much movement in the price of it, and it is what it is. And all of a sudden, along comes, let's say, a Walmart coin that you then can swap your Apple coins to the Walmart coin, and now you can access everything in the store for that same coin. So hopefully that kind of analogy gives you an idea about like the expansion behind what that token difference is and what that does bring, and the need for expanding that supply to grow the ecosystem. It's one that is necessary, because otherwise we really have nowhere to really build and bring people onto the network. If you think about like in fully diluted terms, when you look at like valuations, let's say like the yield at market cap at the moment at a fully diluted valuation is $20 million. And now I know there's a lot of concerns about that dilution ratio. So, but if you're issued a swap to a token that is worth a 70 million fully diluted value, your valuation actually increases while you believe optically it looks like you're being diluted. The coins are worth more, so you have more value that way. So hopefully like that, people can wrap like their heads around like how that mechanic works, but it is actually a value increase. While you are a smaller percentage of the supply, there is a higher valuation that makes your holdings more valuable. So depending on like where you see value, like holding 1 million coins or $1 million worth of coins, there's a difference between the actual value of them and the number of tokens. So I think like everyone on this call is probably more concerned about the USD value of those tokens and not necessarily the actual token itself. It's the underlying value. And if you look at the mechanics behind like a $70 million fully diluted layer one versus a $20 million fully diluted membership token, you'll see that there is actually an instant appreciation of the value that you hold. And it's not exactly like the comparative swap that you guys are looking at. There is more underlying value than what's being assessed in the chat.
But I also think there's another point to this, right? Is that people have got YLD in their membership on the Yield platform, and it's part of the Earn platform. Right, and that's all it does, right? It gives you a utility on the Earn platform. And we've just presented that the Earn platform isn't the only thing that we're going to be in going forward, right? It's let's say tomorrow, right? You all got YLD, regulators come out and just essentially shut down Earn platforms across the world, right? This is not happening anymore. YLD where's it going, right? Well, your utility's gone. So now we're trying to build out the full ecosystem of what we have as a digital wealth management platform with a layer one, and they have some real world value that's actually tangible in the long run. I don't think you can sit there and say this is the same way it was in 2021 when we launched, right? Every Earn platform out there is under massive scrutiny from every regulator, and It doesn't matter. Since FTX, everyone is just coming and looking and saying, can you send this? Can you send that? I mean, the amount of requests we have from regulators, etc., KYC, AML, etc., has gone up tenfold in the last 2 months. And we have to take this seriously, right? We can't just sit there and go, oh, it's all be right. We're all crypto native guys, and why do we care about regulators or governments, etc.? And it's not that world anymore, right? Sam has destroyed this industry, and it needs a massive reset. He has completely taken all the trust out of the industry, and nobody is providing any line of credit anywhere. There's if you look at the cost of funding, anything is going up. When we showed an Earn platform to some of the biggest VCs in the world, they said, we won't touch Earn ever again. That was the response we got. And we said, but we're not Earn, we've got this. And then that's changed the conversation, right? We have to evolve. If we, life is that way, you evolve or die. And we are trying to build what we think the market is asking for. And with that comes a world of experience that we've come across that this won't fly unless we do this. And we need the layer one, and we need the product suite. That's it.
Yeah, thanks, guys. I think very solid answers from everyone, and there's a lot more to discuss in this space. I'm sure we'll publish some token documents as well as utility documents in the future. So stay tuned to those in the community that still have these concerns. We're all ready to answer your questions in Telegram and Discord and in other media as well. It's going to be an ongoing discussion. We're still we're happy to hear any feedback and any answer any more questions and discuss things further whenever we get a chance. I think it's been more than an hour since for this AMA. Tim, do you want to do a bit of a wrap up and then we can close this off?
No, we're going to hold an additional AMA, I think, in the near term. We got more announcements coming in the coming weeks. So, appreciate everyone tuning in today, and thanks Lucas, Cash, and everyone for tuning in. So, appreciate it. And we'll be around in the chats, and glad here to answer questions. So appreciate everyone. A lot of things coming at you at all at once, and we always appreciate the feedback, which way it goes.
And thanks to our listeners. This brings us to the end of our AMA. Look, this is just the beginning of the year and beginning of a lot of new developments. You can learn more about Haven via the brand new revamped BioD website. It has its own dedicated page, and you can find a link to the light paper and the blog there, and to learn more. Anyone interested in becoming a Haven validator can also get in touch with us at Yield App Labs to discuss further. Watch the space for some more news and exciting announcements in the future. Thanks, guys.